Alrighty, welcome back to Weenie Trades, and meet Peter over here on my shoulder. So today was the Wednesday chaos. We had some cats fighting in the morning. There's some stream problems, technical difficulties, and it was a choppy market. So in today's lesson, I'm going to be talking a little bit about trading psychology. Kind of like, it was a little bit of a rough day for me today, but I'd like to share that with you, and so you can avoid having a rough day like I did. So today's lesson is on trading psychology. So I'm just going to talk about how this led to my trading psychology today. This morning, SQ was really choppy. We're kind of making dips, we're making rips, but I was able to trade it pretty well, even within this consolidation pattern. Just buying the dips, selling the rips. Eventually the equilibrium broke bearish, but I was just fully out of the position. So after that first good win on SQ, I kind of felt a little bit bubbly. I was like, ooh, today's going to be a good day. I felt I had a bankroll. And this is kind of what I like to do, at least when it worked well in 2019, late 2019 and 2020, is when I have a bankroll and have a little bit of a profit cushion. I like to risk those profits, but rather aggressively, because then once you risk those profits, it's easier to mentally hold through the trade and you're able to get a really good risk to reward. And I probably chose the worst stock in the world to do this on, and it's all just due to psychology, and that would be Google. Google today absolutely thrashed me. And there's nothing on Google. There's no real good trends. It's kind of just flopping back and forth, going left and right, nothing much to it on Google. And in my head, I'm just like, oh yeah, Google's good. And as you can see, I'm like buying and then not taking any profits. So, my psychology was like, I was overconfident and I felt that Google had to work. And Google is just a downtrend. The Qs today were a little bit bearish. And there's nothing to this. There's no volume, wide spreads. As you can see, I might have to get a different broker because right here, I bought 10 shares of Google right there, 27.28. We moved higher, and my stop, the low of this candle is 27.25.43. Do you see that? My fill is 27.25.11, beneath the low of the day, and the price never even went there. It doesn't mean it has to be like that, but, it happens. Basically what I'm saying is it was just one of those days where things just didn't really work out. And I'm still in Google with the swing trade because I had planned on holding Google for the next coming weeks and through all-time highs. And so this is one of my biggest positions because I had such good faith in it. And it's really just a gut punch when the one stock, the one thing that you had really good faith on goes against you. Right here, I could have taken over 1.2K, $1,200 right there at that top. I said, nope, I'm going for the trend continuation. And boom, you said, hey, I'm holding it at least through tomorrow till tomorrow. Today could have just been a choppy day, down 0.39%. But nevertheless, Google absolutely thrashed me today. And so it was just a red day. The rest of the day, just a little bit of overtrading on other stuff. And what comes with overtrading is it's enveloping FOMO and ego. I'm overtrading because, I don't want to miss out on these good moves. And then it's ego, thinking that I'm going to make money every time that I click the button. So, after a few losses, you have that need to make the money back. And especially if things like you're losing income in other areas, it's like, you're going to be more aggressive, even though there's absolutely no necessary reason to be aggressive. Right, Peter? So what I need to work on is I need to work on being an undertrader, not an overtrader. That's one of my biggest weaknesses, especially in this market environment. I mean, in a hot market, overtrading can make you more money and pretty good money. But, in a not so hot market, overtrading is one of the most dangerous things, at least for me. Not a bullish market, not a bearish market, but a non-trending market. And so that's what I could work on. Also my sizing, I usually always do better when I get consistent small wins over a long period of time or even just medium wins, not on home run trades. And this is a trade that I just wanted to take a home run on. Buying a Google call option is leveraging about $250,000. Even more, almost $270,000 based off the price. So it's a pretty big risk to be buying a Google call option and pretty bold, especially when there's just nothing there. So that's just something that I need to work on through. I'm in my head probably a little bit way too much. There's lots of stuff going on, crazy stuff. I just want to explain my thoughts and processes that led me to just having a bad day. It's not a horrible day. Minus 666 on the day, kind of a weird omen. But what am I going to help to work on my overtrading? I'm not going to stream tomorrow, so I'm going to be sleeping in. I've traded every single day in the market for 4 years. Tomorrow, I'm just going to sleep, let it do its thing. So tomorrow, I will not be streaming, but on Friday, we're going to be scheduling the watermelon stream, where I'm going to eat a whole watermelon on stream. It's not going to be too much stock related. I can still do some stock breakdowns after I've completed the challenge, but the whole goal is to finish the watermelon. You can see, we can do some polls and see what people think, how fast I can do it, or how slowly I can do it. Alrighty, you guys. Thanks for tuning in. See ya.